Hey Bowtie Nation, Joseph Hogue here, and you know I love ETFs for that easy, low-stress investing, so I was shocked when a group of stock ETFs I had never heard of started popping up in the comments. These are some of the most innovative ETFs, giving you the ability to invest like never before. Like one that sends you weekly dividends with just one stock, or another stock ETF that gives you the upside exposure to the work-from-home revolution. So why is it that you've never heard of these popular new exchange-traded funds? Because SoFi does not make it easy to find them. I'll reveal those 7 new ETFs, but stick around and I'll show you the pros and cons of these SoFi ETFs and how to find them. First up is the one I'm most excited about, the Weekly Dividend ETF, ticker WKLY. We've talked about how to buy your own stocks for weekly dividends before here on the channel, basically finding those companies that pay and then creating a portfolio that pays you a dividend every single week. It's a lot of work, and now SoFi is making it easy with an ETF that does everything for you. The fund holds nearly 400 dividend-paying stocks and distributes income every week. Most of these are quarterly paying stocks, but the fund makes sure you get that weekly cash flow. Now, the weekly ETF is diversified across sector and by country, almost too diversified actually. I like that the ETF gives you access to those foreign stocks not even traded in the US markets, but I'd like to see more than a 50% in those US-based companies. Still though, these are all stable, developed markets, and most foreign stocks pay higher yields than their US counterparts. You can find a full list of stocks on the fund's website, but these are all large cap companies and some of the largest in the world, like Exxon, Coca-Cola, and JP Morgan. Now, the dividend isn't huge here at just 3.2%, and the expense ratio of 0.49% is higher than I like to see, something that we're going to talk about later in the pros and cons of these ETFs. But basically, you're paying for that convenience of having everything set up for you. You get weekly dividend cash flow and a portfolio of diversified stocks all in one fund. If you do check out these new ETFs, why not get a free $25 bonus while you're at it? Sign up for a SoFi savings account with the link I'll leave below in the description, and the bank is going to start you off with $25 free. Set up direct deposit, and SoFi will give you up to $250 more. I use SoFi for banking and investing. With my savings account, I get an interest rate 11 times higher than the national average on my savings, along with no fees and automated investing in the investing account. Just look for that link below and check it out. And this next one, the SoFi Weekly Income ETF, ticker TGIF, is similar to that weekly fund, but with bonds instead of stocks. The fund holds 177 fixed income investments and produces that same weekly cash flow, but with that safety of bonds. Even more interesting though is this is the first ever ETF specifically targeting Friday for its distributions, meaning you've got a payday Friday coming every single week. Now this one is a higher dividend yield at 4.7%, but the total return could be a little lower since these are bonds rather than those stocks. They're all highly rated bonds, and a third of the portfolio is in government-backed treasuries. So that bond interest and dividend is going to be almost all the return here. So don't expect the price return too much, but you're going to get stable and reliable cash flow. Now we're just getting started, but I want to show you how to find these because SoFi does not make it easy. You can find these ETFs on any platform through their ticker symbol, but on SoFi, you have to go to your investing account, scroll down, scroll past these features to explore, which are really just offers, but hey, get all the free money you can, and like up to $100 when you trade crypto, or up to $5,000 when you transfer investments. Then you're going to come to this discovery section, which is where you'll find collections or individual stocks around specific themes like these dividend growers or stocks under $10 and biotech. Scroll a little further though, and you're going to find the most popular stocks according to investor portfolios, a great way to follow those investing trends. And then finally, to these SoFi ETFs, 8 exchange-traded funds set up for specific themes. And here, I gotta tell you, I was more than a little disappointed when I heard the SoFi BYOB ETF stands for Be Your Own Boss. But I guess it's still an innovative way to invest in that future of work. So rather than bring your own beer, the fund holds 76 companies supporting or benefiting from that revolution in work from home and the gig economy. It's the first ETF to concentrate on this specific theme of freelancing and solopreneurs. And while the fund is naturally going to be focused in these tech stocks and those in the communication services sector, we see the same level of geographic diversification with half the stocks in US companies, but also those non-US listed stocks across the world. And while I definitely think there is a long-term upside to this theme, as the world continues to transition into an independent workforce and that work from home theme, I question whether some of these companies will truly benefit from it. Now, don't get me wrong, I love the 100% return on my shares of DraftKings since buying it last July, but is it really a work-from-home, gig economy-focused company? It just seems like a lot of these companies are more Web 3.0 focused, which is another good theme, but not this fund's mandate. We've still got 4 more ETFs to highlight, but we're starting to see a trend here across these funds, so I wanted to highlight the pros and cons of these SoFi ETFs. Now again, the video isn't sponsored by SoFi, so I feel like I can lay it all out and let you make the decision. Pros of these funds are that these are innovative themes that you won't find in other ETFs or on other platforms. In fact, to compare the expense ratios, I had to look for a few of these themes like weekly pairs, and there just isn't anything else available to compare them against. You also get access to foreign stocks not available to US investors, and that automated investing feature on SoFi is a great tool to use. On the con side here are those higher expense fees for these funds. Most SoFi funds charge 0.59%, which isn't as high as, say, the ARK Innovation Fund at a 0.75% fee, but still quite a bit higher than you'll find on Vanguard or Fidelity funds. The SoFi ETFs are also really low volume, maybe only a few thousand shares traded daily. Now, the stocks within these funds are extremely liquid, so it's not really an issue, but might be if you have to dump all your ETFs all at once. And one thing that did peeve me off while researching these is that you have to go off the platform to find that information on all these holdings for these ETFs. In fact, the ETF page on SoFi really doesn't show you much of anything. You have to go to the fund page off the platform for the fact sheets and other info. So there are some pluses and minuses here, but I still think these are good opportunities, especially in themes that you won't find anywhere else. Another innovative ETF here, the SoFi Social 50 Fund, ticker SFYF, investing in the 50 most widely held stocks by investors on the platform. The portfolio is rebalanced monthly and holds shares in the same percentage as investors on SoFi. So each month here, the managers look at the top stocks held by investors and then buy those in the same percentages held by the average investor. For example, Tesla is the most widely held stock by SoFi investors, who have an average of 11% of their portfolio in the shares. So this Social 50 ETF has 11% of its assets in the stock. Now, these are all stocks traded on the US exchanges, and of course the focus is going to be on those popular growth sectors like communication services, technology, and consumer goods. Now, all you out there in the nation know I prefer that fundamental analysis and long-term stock investing, but there is still definitely something to be said for this kind of short-term trend following in stocks. While earnings and fundamental health of a company directs that long-term return, in the short term, stock prices are all about investor sentiment, and that's never been more true than now with the rise in the power of Main Street investors. This kind of trend-following social investing is a great strategy because it puts you in those most popular stocks people are following. Another strong growth theme here in the SoFi Web 3.0 ETF, ticker TWEB, a fund of 39 stocks across Web3 theme, including the metaverse, big data, artificial intelligence, and the blockchain technology. A theme analysts estimate could reach $13 trillion in market cap by 2030. Now, as with most of these, diversification isn't really what you're going for here. You're focusing on a specific theme, so you're going to be getting stocks in a limited number of sectors. Here we see the fund is in just 5 sectors, with half the stocks in that tech and communication services sector. And you have all the stocks you would expect to see in this new technology Web 3.0 portfolio, like Nvidia, Meta, and Coinbase. But again, I gotta question some of these picks, like how is GameStop a Web 3.0 company, or is it just a meme stock creeping into portfolios because of its popularity? And that brings us to the big question, really. Are these SoFi ETFs a good investment? I love the innovation and themes here, groups of stocks that you can't find anywhere else, like weekly dividend funds and that stock trend following. The expense ratio on these is quite a bit higher than you're going to find with Vanguard or Fidelity funds, so I'd say shop around a little bit to see if you can find maybe another ETF that invests in the same theme or group of stocks at a lower fee. You can still invest on the SoFi platform and get your free cash and these other extras, but maybe, for example, you go with the SPDR New Economies ETF, ticker KOMP, with its 0.2% expense ratio instead of that BYOB fund. Even if you don't invest in these SoFi ETFs directly, it's a great opportunity to dig into their holdings to see which companies are competing in those kinds of high growth themes. Then, with a little extra research, you can find those individual stocks for your portfolio. I really like this next fund for an overall portfolio, the SoFi Next 500 ETF, ticker SFYX, investing in the 500 next largest companies in the United States. So that market index here, the S&P 500, is the 500 largest companies by market cap. What you get here is the next 500, those with the potential to grow into that market dominance. Now, the fund offers roughly the same dividend yield as the S&P 500, around 1.4% annualized, and SoFi is waiving management fees for the first year on the ETF. After that, the expense ratio will be 0.19%, which is lower than most of these other SoFi funds, though still higher than other index funds. There's more sector diversification here, as you'd expect, since it's not really a theme-based fund. The fund is dominated by four sectors: consumer cyclical, staples, financials, and industrials, but it's really interesting when you compare this against sectors in the S&P 500. You see more than half of the stocks in the S&P market index here in tech, healthcare, and financial sectors, with a third in tech stocks alone. So not just for that growth potential in these mid-cap stocks, but I like this one for an addition to that portfolio S&P 500 companies. So diversifying your portfolio out from those mega cap sectors. Now there's really no rhyme or reason to the stocks held here, just those 500 next largest companies and weighted by sales growth in the fund. And I do like that it has some of those strong growth names like Rivian, along with some of the mature companies like First Citizens. At first glance here, this SoFi Select 500 ETF, the SFY, looks like it's just another S&P 500 replica, but there is a big difference. The fund holds stocks of the largest 500 companies in the United States, just like that S&P 500 Market Index fund, but it doesn't weight them the same. Instead of just holding the stocks in market cap terms, so holding more of those bigger companies, the SoFi fund also weights these stocks by fundamental factors like sales growth. That means there's going to be little differences between the two, like it's not so heavily dominated by mega cap names like Apple and Microsoft, but has more Amazon exposure. I've put the sector weights of the two funds, the SoFi SFY and the traditional S&P 500 SPY ETF, next to each other here, so you can see the difference. The SoFi fund is less heavily weighted in tech stocks, with more in consumer staples, energy, and several other sectors. So you do see a difference here, and I've always hated that the S&P 500 just blindly weights the index by that company size, which basically means it's dominated by just a handful of super large companies, but only time will tell if SoFi's method of weighting is going to be better. It does charge that lower 0.19% expense ratio on the fund, well above the 0.09% expense ratio on the SPY market fund, so you're going to have to decide for yourself if it's worth buying that to pay a little bit more for the SoFi fund. Check out these ETFs and get $25 free bonus cash with the link to SoFi below, or click on the video to the right for the 4 monthly dividend stocks that will pay you every week. Just 4 stocks for weekly cash flow. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.